Hi there, my name is Emma Davidson and I head up the corporate affairs of the Global Value Fund. In this video, I'd like to talk briefly about tailoring the income that the Global Value Fund pays out to suit you and whatever stage of the investing cycle you find yourself in. Firstly, I thought I might briefly introduce the company for anyone that's new. The Global Value Fund, ASX ticker GVF, is an Australian-listed investment company that aims to generate global share market-like returns for its investors, but to do so with a meaningfully lower risk profile. The lower risk profile is achieved by the company only investing into discounted asset plays around the world. Since the company's IPO in 2014, GVF has achieved its goal of delivering equity market-like returns, but for much lower risk. And probably the most important tool that we use to ensure shareholders directly participate in these gains is the fact that GVF aims to pay out all of its investment returns back to shareholders as franked dividends. For the last number of years now, GVF has consistently paid out a grossed-up dividend of around 8 cents a year. In addition, the company has always and continues to run a very healthy profits reserve, which at an absolute minimum has covered a year in the future's worth of dividends at the 8-cent rate. Now, a question that does come up from time to time is the question of whether GVF is looking to provide shareholders with income or growth. And the answer is simply that the choice is yours. As the default, GVF has been set up such that every new investor joining the register will automatically receive the 8-cent dividend in cash. This cash payment is made on a semi-annual basis in the May and November of each calendar year. In committing to paying out all of the returns that the portfolio generates through time, the company is deliberately handing over to shareholders the choice of whether they'd like to hold on to some or all of the investment gains made by the company, or whether they'd prefer to reinvest these gains into additional shares. For shareholders that prefer to reinvest these returns and see their investment in the company compound through time, we suggest that they enroll into GVF's Dividend Reinvestment Plan, or the DRP. Once you opt in, and remember the opt-in amount can be any amount you like, so 10% of the dividend, half of your dividend, the whole lot, you decide. But once you have opted in, GVF will operate the entire reinvestment process for you. What's more, the program has been set up in such a way that those enrolled always get the lowest reinvestment price possible, as well as receiving all of the franking credits that they're entitled to. In addition, the GVF DRP has been specifically designed to ensure that there is never shareholder dilution. Enrolling in the DRP takes about 2 minutes, and if you're interested, please reach out to us directly. Thanks for making the time to listen, and as always, if you have any questions at all, Miles, myself, and the GVF board are at your disposal.